Holding the line. That's our topic for today's Backstage Pass. Good afternoon, friends. Hope you're having a wonderful day so far today. Here as we move into the afternoon session, stocks are mixed. The S&P and the NASDAQ are both down. The Dow is up just a little bit. Mortgage bonds are up, though. Mortgage bonds are up about 20 basis points at the time of recording. The 10-year yield is down about 7 basis points, trading at 3.43%. That's a nice move lower. The national average for a 30-year fixed-rate mortgage, conventional mortgage, that ended the day yesterday at about 6.39%. Today, based on market activity, we do expect that to come in a little bit lower. And look, as we look back for the last few days, the mortgage bonds have been holding and kind of towing the line of the 100-day moving average up above that 100-day moving average. Now, what the 100-day moving average is a look back at the data for the past 100 days, the price for the mortgage bond, and then it just averages that data out. And that 100-day moving average provides either typically a ceiling of resistance or a floor of support, depending on which side of that line bonds are. There's other ceilings or floors, Fibonacci levels, a 25-day moving average, a 200-day moving average. So there's other technical levels of support or resistance. But right now, on November 30th, mortgage bonds jumped up above that 100-day moving average and have been holding that line as a floor of support ever since. And then today, well, we got some news today from the Bureau of Labor Statistics about productivity and unit labor costs, and that kind of gave bonds a little bit more of a boost today as well. So the data we got from BLS, this is data for quarter 3, and it showed that productivity in quarter 2 was down about 4.1%, a negative 4.1%. Well, that flipped for quarter 3, and it's up in quarter 3. And then also we have unit labor costs. The expectation for unit labor costs was going to be around 3.1% for quarter 3. It actually came in just under 3%, so beat the expectation. And the previous reading in quarter 2 for unit labor costs was like 9%. So what we're talking about here is it's a measure of the labor cost to produce a single unit from a business. And both of these numbers, this productivity and this unit labor cost, well, these numbers reflect deflation that is happening. So unit labor costs coming down, productivity coming up. Those are deflationary numbers, and bonds kind of got the best of that for today. Now, we also got from today, we got the Mortgage Bankers Association mortgage application data for last week. And just a quick reminder, we're coming off of a holiday week, and so typically the week after Thanksgiving is normally a little bit slower. Show the mortgage applications for purchases, well, they fell about 4% last week. They're down 40% year over year, but here's a pretty interesting number that the national average, according to MBA, for a 30-year conventional mortgage, well, last week it went from 6.49% to 6.41%. So seeing that drop, kind of consistent drop in interest rates, and we're definitely seeing some activity pick up as a result of that. Just one other quick anecdote. This time last year, mortgage rates were about 3.3%. So pretty big difference between this year and last year. Now that's all the news that we have for today. Tomorrow we get initial jobless claims. That's going to be watched closely. On Friday we get producer price index. This is a wholesale inflationary measure. Again, got to be watched closely. Many of the markets are kind of looking at the PPI and probably considering that a preview for the CPI that we're going to get next week. But again, that's all the news that we have for today. Remember, stay positive. Have a great day, and we'll see you tomorrow.